It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes and money and love letters and tax returns that haven't been paid and balance dues and getting ready for next year. Because let's face it, September's just around the corner. We got September, October, November, December, then the jig is up again. So if you have any questions, wondering whether to take money out of your 401k plan to pay off your credit cards or whatever, 8030930 is our phone number here in studio, 8030930, star 930 on your cell phone. And we have something special today, right?
We do.
We do? All right. Happy birthday to you. Happy birthday to you. Happy birthday, dear Christopher. Happy birthday to you.
And Gracie wants to say something.
Happy birthday, Daddy.
Happy birthday, Christopher.
Thank you.
So today is actually the day.
Today is actually the day.
Well,
yes.
Happy birthday.
Thank
so you guys all know Chris is here.
That's right.
And this is Tiffany.
Hey there. Nice to see you. Nice to be with you, Esther.
Yeah, nice to be with you, too. All right, well, let's talk about serious stuff. Of course, turning older is always serious, but we want to talk about, since, fall is just around the corner. Everybody's thinking about going back to school.
That's what they say.
And we have a tax school that's starting in fall. And I will tell you, it's tax deductible to take the course. Even if you don't work for us, it's still deductible because you're learning something about income tax. But we have a phenomenal tax course. It's a tuition-free course. The only thing you pay for is your book, and we have discounts if you register early and pay early. And I just thought it would be interesting for people to see what we cover.
Sure, I think that's a good idea.
Why don't we start off at that?
We start off with filing requirements. Single, married filing joint, had a household, widow.
And that's really important.
Widower.
Because the wrong filing status steers the percentages, steers the rates, steers the floors.
I have a really good example. There's a person that I said, you got to come see me instead of somebody else. And she had been living in her home with her sisters and her brothers who were disabled. And they had been doing this 50-some-year-old lady as single when she took care of the whole household. Nobody else worked. And she should have been had a household. And so she got thousands and thousands of dollars back. And she's remodeling her house. And every time I go there, I get goosebumps.
Yeah. Isn't that great?
But
something simple like a filing status, and because people say, oh, I got an easy return. I do it myself. Okay. Yeah. I mean, it's only easy because you don't know the law, right? But many times if you know the law, it complicates the situation, but you end up saving lots of money.
Yeah, and I'm sure you have stories like that left and right, Chris?
Oh, there is. The question we get asked, do you have to file? So the filing requirements come into play, when you have to file. I love people who always say, well, now speaking of birthdays, just turned 80. I don't have to file.
Wow, you look good for 80.
Don't I? But I don't have to file anymore because now I'm X amount old. And that's not the
true.
Truth. It all goes by income.
And, a lot of times people think they don't have to file, but if they file, they get money back, right?
Yep.
You don't have to file, you just want to file. So what else we do? Kind of run down that quickly.
Had a heading of a return, preparing a return, sample return dependents and exemptions.
Which is really, really important. We're going to talk about that at the end of the show.
Determining support. We got the qualifiers. Girl Scouts join Red Cross, and that's always a good acronym that we run by. That's gross income. Joints, filing,
support. Girl Scouts, so support joint return, residency, and as citizen of the United States, and residency.
Accounting period and filing dates, which last week we talked about the changing of some dates.
That's changing, yep.
Wages, salaries, and other income, tip income, military and disability pay, determining your tax liability, or I like to call it your tax bill, taxable refunds and credits, dependent care credit, child tax credit, additional child tax credit, adoption credit, earned income credit, kiddie tax, and then we talk about the Schedule A, itemized deduction, unearned income, what is unearned income, what qualifies for unearned income, education credit, other income such as retirement plans, annuities, Social Security, disability pension, capital gains, educator expense, moving credit, alimony, IRAs, Roth IRAs, tuition and fees, Schedule C's, Schedule E's, and everything in between. Estimated tax,
and
amended tax
then
returns.
to round it off, we teach the corresponding state of New York.
Correct.
Right?
That's right.
So if you think that you'd be interested in, and it's a great class because it's in an
Hands-on.
adult setting on a computer, and if you don't know how to use computers, we teach you, right? And I'll tell you, it's just good for your head, your brain, and it's good for your taxes.
Yep, and not to mention our hope is that you come to work at one of our 28 locations, and it's a great opportunity.
Yep.
So,
Right.
yep.
So, all right, 8030930, 8030930, star 930 on a cell phone. We want to talk about planning ahead. I just had a client that came in the other day, and he is getting all of his teeth taken out, and he is having dental implants put in. And he said to me, should I spread it out over years? How should I do it? And so the whole thing is what he's going to do is take out a home equity credit line. Now, three things, actually. When he does a home equity credit line, he gets a very low rate with no closing costs to get it. Number two, he can pay off all of his medical all at once because dental is medical.
Right.
And number three, he's going to get a great smile in a very short period of time.
And not to mention, if he's over the age of 65, this is the last year for the
7.5% floor.
Right.
He's not, though, unfortunately.
Okay.
So adding up all of his expenses, because the dental stuff is so expensive, it's going to be about $60,000. He's in a 30% federal and state tax bracket, so he gets back $18,000 in savings.
Wow.
So it is definitely worth his while
Right.
to front end load it. And
And
that's
so-
really, really important.
When you explained it to him, was he like, well, there's my answer?
He said it's still a lot of money. I said
But not as much.
not
as
as much, not 60,000. It's true. It's still a lot of money, but isn't it great to play the angles?
Right.
And
And
last,
plus the interest is deductible, right?
Right,
Chris?
right. The interest on the home equity is deductible. That's another savings for him there. So, it does help bite the bullet a little to get it done. But, I know I had a cousin who had to have it done. Same thing, had major dental surgery, and he did bite the bullet with the expense, but it helped a little on the tax return, so it helped sweeten it up a little. But, it's just amazing with what we can do, and knowledge is power.
Well, it was interesting because then kind of to build on this, the other day I had somebody that said that he was having major dental work done, and he wanted to take it out of his 401k plan. So here on this side with the guy taking out a home equity, he's saving $18,000. This other gentleman was like 55. If he would have taken $60,000, it would have all been taxable. He would have paid a penalty, right? And so that completely would negate any of the tax savings. Yeah. So it's so important before you do something like that. It may seem benign, and you think, I don't really want to have a loan, and it's true. But we had it all worked out that the payment's going to be very low, and it would be deductible as he does it, and he's going to save what he would have saved in taxes if you take it out of your 401k, especially before 59 and a half, can cost you the entire gain, tax savings.
I was thinking that guy who was thinking of taking it from a 401k, he might want to consider a loan from his
That's
401k.
right. Absolutely right.
Yeah.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll talk to you on the other side.
It's your birthday. Happy birthday to ya. It's your birthday.
All right, Christopher, happy birthday. I'm Esther Golias from EG Tax, 8030930, 8030930, star 930 on a cell phone, talking about things you need to plan ahead for, like medical, employee business expenses. If you're somebody that is using their personal car, their home for business purposes, you're going out, taking people for lunch, you're pressing the flesh thing, how good you do and what a great job the company does for you, and you're paying for your business expenses, those are deductible on a 2106. The thing is, it's really important. You're much better being on an accountable plan. Now, what does that mean, Mr. Birthday Man?
Well, an accountable plan is when you're held accountable for your reimbursement, which means you have to turn in your receipts to get reimbursed.
Well, that sounds like it'd be just a pain in the neck.
But it's the best thing.
Because why?
Because if you spend $50, you get $50. So it's $1.
You mean I don't get the write-off?
You don't get the write-off.
And here's the thing.
And it doesn't count as income.
This is what people don't realize. You wouldn't get the write-off. That's true. You just get 100% back.
Yep.
When you deduct $50 and you're in the 10% bracket, what do you really save in taxes?
I'm sorry, 50 or 500, did you say?
If you deduct $50,
then
we're
you get
taking
$5.
$5 back. But when your employer says, turn in your receipt, and they write you back a check for $50, you just got back 100%.
Yep.
Right?
Yep.
So it's much better to be on an accountable plan.
Yep, and I want to throw this out there. If you're in an accountable plan, and they, correct me if I'm wrong, and they bulk up your wages and they put it in your wages and you're taxed on it, you can write that off on a 2106.
Okay, that would be a non-accountable plan.
Right.
A non-accountable plan is where
It grows up.
right.
Right.
They put it in your W-2.
And so be careful.
And so that's the whole thing. And on when you're in a non-accountable plan where they just say, do you know what, Tiffany, we're going to give you $500 a month. Just go out and do what you got to do. So that $500 a month is not accounted for. They put an extra $6,000 in your W-2, and the only way you get that back is to do a 2106. But you're only going to get back that percentage, right?
That's right.
So if you're in the 10% bracket, they included $6,000 in your W-2. You not only have to reduce those expenses by 2% of your adjusted gross income, but you're only going to save 10%. So
I would much rather have the accountable
you
plan.
really, and I just think that what you need to do, you need to have this chit chat with your boss, because you know what, many employers are small businesses, and they don't know what to do.
Right.
I mean, they're not tax people. They don't know. And so sometimes the best thing to do is come on in. What we'll do is we'll show you the difference, and then we'll help you with your employer.
I had a client on Monday, and he, for year after year after year, he's been getting a letter from the IRS because his employer, for his mileage, puts it on a 1099. Remember him, Chris?
Non-employee compensation, I bet you.
Right.
Oh,
yes.
dear
And
God.
so the preparer he was going to was putting it on a Schedule C, and they weren't washing out the miles. They were doing it in excess. So he was having a loss of like $4,000 on his business. So he was getting audited year after year after year. And so we're opening up the audits because really they should have done part of it on the Schedule C. They should have done the rest of the expenses.
Well, the guy should have never put a reimbursement on a 1099 MISC, non-employee compensation. That makes it look like he's self-employed.
Right. Well, he said he kept going back to the business accountant, and the accountant said, this is how we do it. This is how we do it.
And that's another thing. When you're dealing with small businesses, that may be how they do it, but they're doing it wrong.
Right.
And so it's really nice if you get somebody that's in your corner that says, hi, Mr. Accounting guy at my client's small business, do you know that if you do this and this and this way, I mean, we'll even come in and help them because it helps you.
That's right.
I mean, it just drives me crazy.
But you should know what type of plan you're on, because you may be on an accountable plan, but work may say, you know what, Esther, we're going to let you, the first $7,000 worth of expenses we're going to reimburse you for. After that, you're on your own.
Right.
So then you got to know anything after that $7,000 you can write off, but get that to the point when
That's
you
right.
save that check or that letter saying, I'm sorry, you reached your maximum.
But again, these are conversations people don't even have with their employer. First of all, the employer, if he's a small business guy, he just wants to be able to make his payroll every month, and he's not even thinking about am I on account? This is all I can reimburse somebody, and they don't know if it's an accountable, non-accountable plan. Is it And so these kind of things. Here it is, almost September. If you need help with that, we're very happy to talk to your employer. How about if you're working out of your home?
Yeah, you should.
And you say to somebody during you doing their taxes, now, do you work out of your home? Yes, I do. Do you have a separate room that you use regularly and exclusively? Well, no, I kind of use the kitchen table. I mean, you just blew a gigantic deduction.
Right. Yep, absolutely. My gosh, they spend so much time working at home. There's got to be a place where you have all your papers and the printer and the computer, and so
Well, and if you don't, make one.
right.
And use that room for business, because then you got an office and home. Then it means that on the days that you're working at home, that commuting expense has already been taken advantage of. So you get the 50-some cents a mile for what would have been commuting. All those things really add up and can save you money. And if you don't know what we're talking about, call Auntie Esther and Chris and Tiffany on Monday, and we'll help you, because we don't want you to overpay.
Yep.
Right?
Give us a call now too, 803-0930, 803-0930,
Okay.
star 930.
All right.
But but we also have, someone came in the other day. I got an email. I emailed Ask the Tax Lady, and I got this answer. And what's your opinion? I said, well, just so you know, the person who emailed you is
me.
Esther herself. And he's like, what? Really? I said, yep, it goes right to her, and no matter what time of day, she answers them.
I
So-
do. I'll hear pring in the middle of the night. I'm a very light sleeper, and I'll answer. Because now many times, when you're doing an email and taxes are so complicated, you have to ask a myriad of questions. And sometimes I'll say to people, call the office, because this is way too complicated to get into on an email. And I wouldn't want you to base your decision on something I don't know all the facts on. But most of the time I answer it as best as I can. All right, why don't we go to the phones? 8030930, 8030930, star 930 on your cell phone. We have patient John from Niagara Falls. Hey, John, how can we help you?
Esther, how are you? The first thing I want you to do to give a raise to the screener. He was a very, very nice.
Isn't he a nice guy?
That's Jay.
That's Jay. He's a wonderful guy. He's been with us for years and years.
Very polite, fantastic.
Thank you, John. How can we help you?
My question to you, I understand you are expert and you are very smart, so I am testing you now. So, Esther, I am 77 years old, okay, and I have IRA with some firm. Maybe I should mention name in case the stockbroker is listening or something.
No. Just that you got an IRA is good.
Okay, and my bank is M&T, and I finally woke up and I paid attention to my statement, and I see that firm is charging $75 every month for handling the portfolio. And actually, I told the broker that I don't want to lose any money from the principal. Make sure invest the money in something that maybe give me about 2%, 3%. I am taking out every month $500. At the end of the year, $6,000. I am reporting it for taxes.
Right.
Now, my question, Esther, to you, I know your time is very valuable. If I have if I authorize my bank, because that with the volatile stock market and my stockbroker doesn't keep in touch with me, even he's a friend or stuff, I am losing every month. So I decided to check with the bank. If I authorize my bank, they have a program, mutual funds or something, but I don't lose any money from the principal, and it pays about 1.5%. If I transfer those money to the bank, I have the bank get the money out to their account, to my account with them. Do I have to pay tax on the total amount? Or
All right, John.
Okay,
here's the thing. If you're transferring it, direct rollover from one bank to the other bank.
The other is not the bank. The other one is, I don't know if I can.
All right, but if you're doing a direct transfer, all right, from one financial institution to the other, and it's going to be institution to institution, IRA to IRA, it's not going to be taxable. If, however, you're taking the money out of your IRA and putting it into a non-IRA account, then it's going to be totally taxable unless it's a Roth IRA.
Oh, it's not Roth IRA, dear. It's IRA. And the transfer to that new institution, which is M&T Bank.
All right, and it's going to maintain, it's going to be IRA to IRA, correct?
Qualified retirement.
Right?
Pardon me?
It's going to be IRA to IRA, correct?
No, she told me they have a program like mutual funds.
But it's going to be an IRA mutual fund. Is that correct?
Oh, I have to check on that.
Okay, well, this is critical because if it's $100,000, just for easy math, and it makes you go in the 20% bracket, you're going to pay $20,000 in taxes on the federal and probably $5,000 to New York State. So you want to make sure it's going from a qualified retirement plan IRA to another qualified IRA, and that's critical.
Oh, so the bank I am going to be transferring the money to, they should have IRA.
They have IRAs. Yes, they
So
certainly
if they
do.
don't, I'll have to pay tax.
John, you'd lose so much money in taxes. You may as well stay where you are because you at least have a slow bleed. This would be a gigantic bleed.
Oh,
Make sure you do not take it from an IRA unless it's going to an IRA.
okay. And continue. Let's say it's not IRA, and I stay with the same firm. Is it fair to keep paying $75 a month?
Well, I got to tell you, I wouldn't. But I mean, if they were setting the house on fire, that'd be one thing. But if you're not making any money and you're paying $75 a month, that's a lot of money.
I know, and I am not making any money.
Well, you know what, John? Why don't you call me on Monday or email me so I can call you and we'll talk.
And,
Can
you
we
know,
talk, John?
And one of my clients said that the money that you pay per month is of value if they're doing a good service and they're making money on your money. There's a reason you pay the $75, and that's because they're an expert and they're a professional. And so there's good value in the money you pay if they're doing a good job with your money.
I respect exactly that.
That's exactly right.
That's what my intention.
So,
is.
so
I'm not
John,
making money.
call EG Tax Monday 632-7886. We'll talk privately because we don't want to talk. Oh, we
Give me the
don't.
number again.
632-7886. Okay.
7886.
86. Yep.
Thank you.
Have a great weekend. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to break for the news. We'll see you on the other side.
Down at the New Amsterdam, down at this yellow-haired girl, Mr. Jones strikes up a conversation.
Oh, I like it. All right, who's that? It's who?
Counting Crows.
Oh, Counting Crows? Why didn't I know it? I thought maybe counting hummingbirds. I'm Esther Golias, the tax
No, we do that
lady.
in your backyard.
I do. I have right now about 10 hummingbirds that are fighting with each other. There's like this alpha male hummingbird who like sits on the tree branch and will let the other ones eat. And so they chase each other around. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. And we have Diane from Buffalo who's been patiently waiting. Hi, Di. How can we help you?
Hi, Esther. Esther, I inherited $85,000 worth of paper savings bonds,
Mamma mia.
and most of them have all matured.
Uh-huh.
There's about 190 bonds,
Mm-hmm.
and they're not in my name.
Okay. All right, so here's the thing. When did the decedent pass away? How long ago?
4 years.
All right, now the estate did not make the election to pay the taxes on the interest?
I don't understand.
Well, there is an election that could have been made by the estate that said that on the final return of the decedent that the interest could have been claimed on their return, and many times that's the best way to do it because
Yeah.
they would
none
be
of
in a
that
much
was
lower tax bracket.
Yeah, none of that was done.
Wow. Okay, so you want to cash in those bonds?
Well, I don't think I should cash them all in.
Well,
if
the
they-
ones that are matured, you certainly want to. I'm sorry. Go ahead.
I was just going to say that same thing. The ones that are matured, you're going to want to cash in because they're not earning any more money
Right.
for you.
But maybe she should spread it out over the next 2 years.
Right, but here, Diane, are you a married lady?
I'm single, and there's no other children, no family, nothing.
Okay.
I'm an
So
only
do
child.
you have, what's your source of income?
I earn about $22,000 a year.
Okay, so one thing is there a pension plan at work?
I'm 66, and I work part-time.
Okay, so there's no pension plan at work.
Yeah, there is. I mean, I get a pension.
All right, are you contributing to your pension?
Yes, I have IRAs.
No. Do
At
you
work.
have a pension plan, like 401k plan at work?
No.
Is
no, none of
is
that.
the company offer one?
For part-time.
No, no.
They don't have
no, it
one.
doesn't. No.
So all you have is your IRAs.
That's it.
Okay, well.
And you may put in your maximum.
Well, you know,
She
here's
could
the
put money
thing.
into an IRA.
Let's say do you have any idea what the interest is going to be like 50,000, something like that, hey?
Yeah.
Okay. So the bottom line is you're going to pay about $8,000 in taxes if you cash them in. But at least they're done. It's done.
Oh my.
I know, but you know what? What good
I
does
know what you-
$85,000
But
do
actually
if you can't spend any of the
and
money?
it's not 85. It would be
Yeah, I know what you mean,
130,000.
yeah.
No,
so,
I thought she said 85.
Well, 8. Oh, okay. I thought
assuming.
85,000 was
Plus
the
the
face
interest.
value
Yeah.
plus
The
the
total
interest.
value.
Right. So what the interest is how much?
It
Yeah.
looks here like $70.08.
On each bond.
Yeah.
But how many bonds was there?
190.
All right, so about 140,000 in interest then. Okay, so you really would want to. I think you would want to spread it out over 2 years, this
Well,
year
it says
and next
here,
year.
I'm looking at it now. It says here total interest $71,496.
Oh, that's it, right?
Yeah.
So you're going to pay about $14,000 in taxes.
Wow.
But the thing is, here's
got
the
all
thing,
that money.
Diane. What good does it do if you can't spend the money, you can't invest the money? You know, somebody's got to pay the piper,
And the nice thing is that it's tax-free on New York State.
right?
yeah.
Right.
You know that.
So if depending upon how your tax bracket works out, okay, and
Yeah.
you can call us on Monday and we'll work it all out for you. Tiffany's right. Maybe you want to do half this year and half in January. But
Yeah.
the bottom line is, you really need to deal with this,
Yes, I know. I need to deal with it soon.
right?
Correct.
And then we'll talk about every tax loophole that's available to you.
Yeah, because you
but,
could put
but
money
I'm
into
gonna-
an IRA.
She already says she does.
Okay.
Yeah.
I thought she said she was drawing from her IRA. Okay.
So
I am drawing from my IRA, but it's got nothing to do with these bonds.
no, she's how old? You're how old, Di?
66.
66.
All right,
But
so
you're
you
working.
can contribute to your IRA too.
I still do.
Yeah. Okay.
Good. Good.
So I mean, you got to deal with it, Di.
It's a good problem.
It is a wonderful problem, but you got to understand. Then you can, if you can make 2% off your $100,000. You know, if you end up with $100,000, that's $2,000 a year. And in a couple of years, you're going to make back. Well, 5 years, you're going to make back 5 or 6 years what you lost. So that's a good thing.
Yeah, that's a good thing.
Okay.
And the number is 63278.
886, and there's no charge.
Oh, thank you so much.
Bye bye, sweetie pie.
Bye-bye.
Bye bye. I'm Esther Gullius, the tax lady. 8030930, 8030930, star 930 on a cell phone. It's, you know, it's a wonderful. I mean, look, Donald Trump is a gazillionaire, right?
Right.
The guy pays a ton of taxes.
Yeah. Yeah.
I mean, Hillary Clinton is a gazillionaire. She pays a ton. I
Right.
mean, it's a good thing. A tax problem is a good thing.
It is.
As opposed to a
And the thing
non-tax problem
is
because
that-
you're poor.
Is that they've all matured and they're not collecting interest.
Right,
So if
she's
she
losing
gets
the
that
money.
she puts it into account, like you said, in 5 years,
Right.
she's hopefully recouped.
And I'll tell you, you can get 275 on a CD.
Right.
You if you know if that's what she wants to do. All right, we got Todd in Lancaster. Hey, Todd, how can we help you?
Hey, Esther, how are you?
I'm marvelous. How about you?
I wish I had Diane's problem.
I'm going to tell you. You know, when
I think there's a
sometimes-
lot of listeners out there.
Sometimes people say to me, I got this problem and I don't know whether I want to take it. And I'll say, I'll tell you what, give me the money and I'll pay the taxes.
Right.
You know,
Exactly.
right?
Exactly. Paying taxes is a good thing. It means you're
Amen.
making money.
That's for sure.
I have a question. I've called into your office a couple of times, and I don't know if I'm in the minority or not, but basically, I filed my taxes this year with Bill, and I was due a refund of $1,400 and change. Or, I'm sorry, close to $1,300, and I still haven't received it back. And I've gone online, and every time they say, "Well, your
processing.
refund's being processed,"
Uh-huh.
yeah, and I don't know if that's.
Well, I will
again,
tell you, it's you are not in the majority. There are a number of people that we just cannot get the refund loosed up. But the best thing we find to do
Form
is
911.
right that, or if you want to come in. Or we'll do a three-way. Tiffany's like the queen of three-way calls. We'll do a three-way call, and you just kind of got to get your popcorn and a soft drink and sit there and wait to talk to somebody. and we'll help you.
I got to tell you, this year I can't even get into a queue to wait forever. They hang up on me.
It's really tough to get in touch. And then when you do get in touch, they even it's being processed. There's nothing else we can tell you. So I think the best form right now to do is a 911.
Yeah. You want to come down, Todd? We'll do a 911 form for you.
That's getting a tax advocate involved. It's like an emergency form.
Oh, okay.
And it works.
I'll do that this week.
Yeah, do that, and then, because nobody wants to help you more than we do, but unfortunately, one of our commercials we're going to do this year is how you're out there all alone if you do your own return. They don't answer the phone. They don't send the money. They send bad bills. There's nobody to help you, and that's part of what we want to do, because we'll get you a tax advocate.
Oh, no, I've been going to you for like 25 years.
Oh, no, and I really appreciate it. But what I'm just saying is what's happening with the IRS is it's almost like there's nobody home down there. It's like the light is turned off.
Right.
So, come on down. We'll do 911 for you, okay?
Okay, sounds
Thanks,
good.
Todd.
Thanks very much.
All right, bye-bye.
All right.
Isn't that frustrating?
Yeah, and you're right. You feel like and not so much Todd, but other people. They're out there all by themselves, and they've got nobody where to turn to. It's sad.
It is sad. It is sad.
I pay a lot of money to the IRS. I would like a little customer service.
I know sometimes you call the IRS and say, "Now I have a real complicated situation. I'd like your opinion." And they say, "Call a tax advisor." And you say, "I am a tax advisor." Well, what do you think? Okay.
Well, I called yesterday for somebody. The kid's refund was put in the wrong account. He entered the wrong account number, and the bank won't help him get it back. There was a true account number. The guy from the IRS goes, "How can it go in someone else's account? His name has to be attached to it." I said, "Sir, not anymore."
Numbers.
"What do you mean not anymore?" I said, "They changed it like 4 or 5 years ago." He goes, "They did?"
Well, now get this. This year, they changed it back.
I
just was reading in the our tax magazine that they just changed it back because of identity theft, because so many people are having multiple deposits put into the different in the same bank account. So now this year but in the past it was. You're right. You could put it in anybody's account. Let's go back to the phones. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone, and we got Joe from Lancaster. Hey, Joe.
Hi, Esther. Thanks for taking my call.
Yeah, what you need?
Well, I'm 7 years old this year, and I'm going to start taking deductions from my 401k. I'm retired.
Okay.
And I make $15,250 in Social Security and about $7,200 from my pension.
Okay.
My question to you is, I want to take out $5,000 out of this 401k. How much in taxes out of that $5,000 would I be, responsible for?
Are you single, Joe, or married?
Single.
Okay, so
I think
I would say none.
None.
Right, because on your Social Security, that's not going to be taxable. So if you put another 5 on top of the 7,200, you're at 12.2, and you're not going to pay any taxes at all.
Barely, if any.
Okay, very good. Thanks for the answer. I appreciate it.
All right,
Have
thanks.
a good weekend.
Thanks, Joe.
Yeah,
Bye-bye.
and that's what someone in Joe's position, should be doing, is using the tax law to their advantage, is taking that money out, knowing he's not going to be taxed, so
That's exactly
then his
right.
beneficiaries later on won't have to pay
A lot of
tax.
people go, "Oh, I want to go to a Roth because I'll never be taxed." And you say to them, the first $21,000 if you're married joint over 65 is not taxed anyway. So before you go ahead and lose all the tax benefits by putting money into the Roth now and aren't going to pay taxes later, and you wouldn't have paid it anyway, you've just given up a gigantic tax break. Right?
Yep.
I'm Esther Golias, the tax lady. We're going to take a short break. 8030930, 8030930, star 930 on cell phone. We got Tony, Bob, and Paul on the other side, and you. We'll see you in a minute.
Did you write the book of love, and do you have faith in God above? If the Bible tells you so.
All right, so that's Bye-Bye Miss American Pie.
Bye.
Who did it?
A single artist.
Paul.
All right, who did it?
Don McLean.
But I at least knew the name of the
Yes.
song. Better than you old-timer, you. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on cell phone. And we're going to go to Pablo in Buffalo. Hey, Paul, how can we help you? Paul.
Yeah,
You
How
threw
are
him
you,
off
sir?
when you said Pablo.
I thought you were going to say Joe. My father is 89 years old, and
Okay.
he hasn't filed taxes in a long time, and he got a letter for a STAR program,
Okay.
and I don't know if he has proof or not, but they said if you call this number, you can obtain proof,
Good luck.
a letter, pardon?
Good luck.
Yeah. Well, we
They
call the
they
number.
don't ever answer the phone.
Well, when they do answer the phone, you get like a recording. It tells you to put in a Social Security number because we have no transcripts.
Yep.
So, how do we? If
All right.
he
So
doesn't have this letter,
all right. So what we've been doing is you can actually file. You can go get you can download a 1040. Put your dad's name, Social Security number at the top. Put his little Social Security in there because he doesn't have any income, right, Paul?
well, he's got his pension and veterans. And,
Well, veterans not taxable. Social Security is not going to be taxable. So let's say his pension's $2,000. You put on.
I don't think he's paid taxes in.
I know, but
15 years.
this is so you can get the STAR exemption. Okay.
Oh,
so
okay.
just fill up, put the little pension in there. You put zeros on page 2. Bring it down to the city, and that's proof.
Oh, okay.
And,
For
and,
the city.
and or wherever,
Or
whatever,
where, the
what
town
the
that
taxes.
for the STAR program.
And if you need a blank 1040, just come to our office and we'll print you off some blank 1040 forms.
Okay.
Oh, okay.
And
All right.
it's
Yeah,
very-
we were to come and see you anyways, but I figured while you were on the radio, I'd
Yeah,
ask you.
smart, very clever. So
Okay.
yeah, just
So-
come down and
so
we'll
if
give
we
you.
just came to your office, can we do that all there?
Yeah, it'll take us 2 seconds because your dad doesn't have to file. And actually, have we been writing letters, Chris, and giving it to the people?
No, I've just done a fast 1040 showing a zero tax
Yeah.
and said, bring this in with the
Right.
stuff you just gave me.
Yeah,
And-
I mean, it's remarkable because the municipality knows that they don't have
Yeah.
any taxable income.
And the truth is,
Well,
if he's a veteran, he probably gets even a higher property tax reduction, you know? Yeah.
Well, he's paying zero now, so I don't know.
Oh, that's a very good number, Paul.
Yeah, but okay. See if he has that letter. It'd be from a long time ago. Would that still work, or does he have to?
No, you have to do it. Every year stands on its own.
Okay.
So,
All right.
okay.
He's got to do it every year now. Huh?
With the city of Buffalo, it's every year.
Yep.
Okay.
Thank
All
you,
right,
Paul.
I'll tell him.
Okay.
All right,
thank
bye-bye.
you.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on the cell phone. We're talking about things that you need to pay attention to before tax time. If you're self-employed, if you're somebody who's self-employed or you have employees or a small business, I know you're making money, and that's really important, but keeping good records is equally as important.
My goodness.
So I'm going to tell you, if you should say to yourself, you know what, I'm going to do a better job, and you know who you are. I mean, if you get audited and you have bad receipts, then it's akin to like being sent up to the firing squad. It's a not good thing.
Yeah.
Nope. I mean, I was just on an audit, and gentleman was on a non-accountable plan at work. And so his write-offs were over $30,000 a year. And he goes, why am I getting audited? I said, because you're writing off $30,000. So we went into the audit, and the auditor said, where's your mileage log? Pulled out his notebook. Where's your expenses for your... Pulled them out. Pulled this. He was very organized. We were in and out within an hour.
Right.
I mean, and that's how you want it.
But how can it be when they're not organized? Then it's terrible.
5 trips later.
Right.
and-
That's right.
Yeah.
So you want to make sure that you do a good job with record keeping. Make sure that you're complying with all the laws, and that can be overwhelming, especially with the Obamacare and everything. And if you need help, call us. We'll make sure that you got your workers' comp. And I'm going to tell you, if you're a small business, don't you think every small business really should be at least an LLC?
Yeah.
I mean,
Right?
depending on what it is and everything.
I mean,
there's-
why not?
Yep.
I mean, you're still doing a Schedule C, so to just get the designation LLC, it really ensures the fact that all they can take is the assets of the business. But if you don't have an LLC, they can just grab your personal assets. So that's something you want to look into doing.
Cash is still taxable.
Yeah, and cash is still taxable.
Yeah.
People, sometimes even my clients, who I love to death, will say to me, hey, Esther, would you like cash?
Do you take cash?
Do you want some cash?
Yeah.
I'll pay you in cash. And I'm thinking, why? Oh, they think I'm not going to claim it? Oh, my God. I claim every single dollar, and if you're in business, you should too.
Absolutely.
Especially, and if you're paying people under the table, basically the net profit stays on your Schedule C, and you're the one who ends up paying the taxes for your employee. It makes no sense at all, right?
Yeah.
Okay, let's go back to the phones, and I got Bob in West Seneca. Hey, Bob, how can we help you?
Yeah. About 3 weeks ago, a weekday morning on WBEN, on their business news, they made a statement that starting January 2016 is going to be deep cuts in Social Security disability. Do you have any idea what? And that's all they said.
Well, I'll tell you what you need to do. Go to the social. Are you a computer kind of guy?
No.
No. Oh shoot. But if you get a chance, go to the Social Security website. So, nobody really wants to talk about it, except for Donald Trump, I think, was talking about Social Security. I mean, Social Security's having problems. When Obama did his budget this year, he was talking about cutting a lot of the service, a lot of the things that they're doing to service your Social Security. By 2025, they want to close all Social Security offices and go strictly to a web-based pro forma. So if you would like, you can call, if you email me through, you can't email. He doesn't have, shoot.
Right.
All right, if you call us at 632-7886, because I don't have time to get your information here on Monday, I will print you up the information from Social Security and mail it to your house.
Because that's where I live on, Social Security disability.
I know. It's not major like that. They're talking about it's just like the IRS. It's hard. They're cutting staff. They're cutting a lot of the programs. You're going to find that you're not going to get the same increase that you were going to get, but I will download you the program. I'll print up the information and mail it to you.
I think they're finding ways to make cost cuts internally and
Right.
services, but not.
But they're not going to cut. They're not going to cut your. They're not going to cut your amount of your check.
Okay.
All right.
Yep.
But 632-7886. I'll mail you the information. Okay.
Okay.
Thank you, sir. Okay. Then we got Lisa. Hey, Lisa. How are you?
Oh, fine. Thank you, Esther. I have a CD that's coming due within days.
Okay.
And I'm not sure what I want to do with it. Where could I put it before the bank takes it? Yeah, what do I do?
So, Lisa, do you have a computer? Are you computer?
No,
Oh,
no, not
shoot.
at all.
Okay. Well, for everybody else, go to bankrate.com and you can, and we'll help you on Monday. Go to bankrate.com. But you can find the highest CD rates in the United States on bankrate.com. Probably the best rate is going to be like one of the web-based banks where you actually, there's no brick and mortar. And probably going out 5 or 7 years is going to be the best. You'll probably get 2.5 to 2.75%. Bankrate.com will give you that information. If you want to stay local, you're probably just going to get completely beat up. You're not going to get any kind of return on investment.
So what Esther's saying is, I think, putting it into a CD again. And so if you go to bankrate.com, it tells
But
you.
she doesn't have a computer.
But
No, I don't have the computer, but if
you got
I don't
kids,
have time
Lisa?
to think about. Well, this is what I want to know. If I don't have time to think about it, and it's only days before it comes due, where could I put it until I get an idea?
Savings account?
Yeah, just put it in your savings account. And then, but again, call us at 632-7886, and we'll do the research for you and tell you what's available.
So I can put it in my savings account without any penalties?
Yeah, because it's a CD
paid.
that's maturing. They're going to give you the money, put it in your, it's not an IRA, is it?
No.
Yeah, you just can put it in your checking account until you decide what you want to do with it.
Checking or savings?
Checking, savings, whatever, as long as it's someplace, safe. Okay?
Thank you so much.
Thank you, dear. Bye-bye. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone, and we got Gary from Orchard Park. Hey, Gary, how can we help you?
Hi, I was just wondering, I have a rental property, and my tenants recently moved out without giving me 30 days notice, and there is a lot of damage in the home, and it's a single family, and it's just to get it re-rentable. I'm estimating anywhere between $5,000 to $7,000 in repairs. If I do a rental loss on that, is that something that they look at to get audited? I mean, I've been keeping my receipts.
All right, Gary. All right. First of all, you mean because you're not going to get the rents, you're going to take a loss for the rents?
Well, I'm going to probably take 2 months loss from not getting the rent, plus the repairs of the property is going to cost me additionally.
Okay, but you realize the lost rents are not deductible.
Correct.
Okay.
I'm talking about the loss from
and then the repairs, if they constitute a capital improvement. We're not talking about shampooing the rugs, and we're not talking about painting, and we're not just talking about some throwing away in dumpsters. We're talking about new kitchen, new bathroom, new linoleum. Some of it you're going to be able to expense. Some of it you have to depreciate.
Okay.
Okay.
Yeah, because it's really going to be new everything just to get it right.
Well, if it's considered to be a remodel, then you're going to have to depreciate it over 27 and a half years.
But I think what you were asking about the rental loss, I mean, it's very valid, and make sure you save all your receipts.
Most people end up with the depreciation, losing money, but you can't expense the rehab. Okay?
Okay, thank you.
All right, thanks, Gary. I'm Esther Goulias, the tax lady from EG Tax. If you need us during the week, you can call us at 632-7886. We have a wonderful website at egtax.com. If you have any questions, go over there, ask the tax lady, and I get up in the middle of the night in my jammies, and we'll answer your questions. Until next week, I'm Esther Goulias with Christopher Fabian, who turned
47.
You're a brave man, Chris. 47, and Tiffany Fabian. Have a great week. See you next week.
Mine's unlisted.
Bye-bye.